A big hello and a very warm welcome to Leaders of Tomorrow, Season 8, with me, Sonali Krishna. The past week has witnessed big bang relief packages for the MSME sector. Should this give MSMEs a big reason to smile, or is there many a slip between the cup and the lip? Joining me today to deliberate just that, I have Animesh Saxena, President FISME, Madan Sabnavis, Chief Economist, Care Ratings, Naina Kidwai, Chairman, Advent Private Equities. Thank you so much, ladies and gentlemen, for joining me on Leaders of Tomorrow. Let me first post the most important question. Lots has been said, the fine print is out. We have had the time to actually drill this down. Enough done to actually get the MSMEs alive and kicking and back to, speeding? Or do you think, we will see several hiccups and challenges in the execution on ground?
At FISME, we represent a large number of SME associations pan-India. Largely, they have welcomed and appreciated the stimulus package, especially the providing the extra liquidity and forcing the PSUs to pay within 45 days payment, and extension of this PF exemption for a smaller units up to 100 people for another 3 months. But our major concern was not addressed fully, because a large number of SMEs, they were not in position to have enough cash to take care of the salaries and wages of the current months, April and May especially, with no sales or zero revenue, and past payments are also held up. So, the cash crunch was a big issue for us right now. Though the liquidity will help, but it will take some time. By the time the banks come up and start offering this 20% loan. So we had requested, our request with the government is, right now the government has said this 20% will be on your availed loan. We have been requesting that at least do it on their sanctioned loan, because some of them may not have availed fully. So whatever is the sanction limit, because this crisis, and while we come up again to a normal level, will take 6 to 7 months. That's our estimate. So by the time, and second thing, should be asked not to use their prerogative, that disbursing this 20% extra loan. Because usually what happens, bank starts imposing their own terms condition. They check your credit worthiness. So it should be immediately on the request of the borrower. So with these things, if the government can take care, it will be largely a good way to industry, MSME, to survive this onslaught.
Sure. I get where you're coming from, but let me get in the chief economist on the panel. So, Madan, if we've heard the FISME president Animesh and his concerns about the reality on ground. But if I had to ask you, in terms of real liquidity, in the hands of the MSMEs, is that really going to be possible, given the fact that how confident are banks going to be lending, this kind of money, given that we've already seen the banking crisis take horrible twists and turns, and they continue to be vulnerable. Given that, firstly, what is the confidence of the banks to be giving out this money? B, will the MSMEs have the confidence to take that loan because, there are no real buyers in the market currently?
Okay, I think these are good questions which you have asked. Now, we should remember one thing, that even under the normal conditions of priority sector lending, there are a certain amount of funds which go to the SMEs from the banking system. Now, I'll tell you why this program or this particular package of a finance minister is different. Because when they're talking of 3 lakh crores being sanctioned to the SMEs, there's a government guarantee which is going with it. So this actually addresses your question of saying that will banks be confident about lending today? Yes, definitely more than what they were yesterday, because of the guarantee which is being provided. Now, the second question which you pose is also more relevant, that will the SMEs be willing to borrow right now? This goes back to saying liquidity is one of the issues. We also have issues in terms of labor, where SMEs have been affected the most, because when you're talking of the migrant labor, a large part of that works in the SMEs. So I think that's been totally dislocated. It's going to take a long time before it comes back. So therefore, your production processes cannot be in operation. And the second part is of logistics. So the three L's basically, liquidity has been addressed. Labor is probably still work in progress. Logistics is where your supply chains have to be in motion. We need the other companies which the SMEs are dealing with to be back on their feet, because if an automobile company is not functioning, the auto component manufacturer will not be in a position to produce. So this kind of chains will also have to be strengthened, which will probably again take another 6 to 9 months. So I would tend to believe that the government has done quite a bit on the supply side, but it's left to the SMEs and the banks all to get together to solve it. So I don't see a kind of immediate solution in the next 6 months or so. It's something which is going to get protracted probably for the entire financial year.
Let me take that thought forward and take it to you, Naina. Would you be in agreement that the demand side of the story has not yet been addressed, and that is really the biggest concern? The kind of confidence that the sector is seeing on ground still leaves a lot to be desired?
I think both the previous panelists have made very pertinent points. And unless, of course, as you rightly point out, there is a business to be done, a business to be had, demand in the market for the products that that company, SME, MSME makes, clearly the long-term deliverable and, in fact, that ability of that company to stay alive remains an issue. Right now, the majority of the fixes are to do with liquidity. Those that the government has proposed were really, there's a lot of liquidity in the system. Banks have been putting the money right back to RBI. There was quite a tussle in terms of who should bear the risk. And I think what the government has proposed now through these credit guarantee schemes, which is some of the asks that we've had from FICCI, are all in the right direction. And in fact, they're very smart because it doesn't put a huge burden on the economy, a burden which would otherwise be felt by everyone through either higher tax or inflation or a very high fiscal deficit, which would see the country's rating go down. In fact, some of the analysis I've seen suggests that if all of the packages that are proposed for the MSMEs and NBFCs in what was tranche 2 of the announcements, it's about 3 trillion rupees. It's 3% of the GDP of the country. However, it's only 0.1% of the GDP if you look at the outlay, because some of it will come back over time only in the event that the loans go bad. So it's very smart in terms of the way it's been done, and it's ideal both for the economy and for money to flow. But I think the point made was very, very valid in that this is going to take time to execute, and the need is right now. And there has been this, if I may say, quite unnecessary pain inflicted on companies on the mandatory payment of workers, even though the shutters are down. And that cost is not an easy burden to bear for someone who's had no business over the last 2 months and may not have full capacity utilization, frankly, till the end of the year. I would just add one point which maybe was not touched on, and that is many of these SMEs are part of the supply chain of large companies. So what we need to do is fix the entire chain. It's not good enough to say that we're going to keep the SMEs and MSMEs alive. And you see that, for example, in companies like Maruti, where unless Maruti begins to manufacture, that huge supply of auto ancillary companies, small, big, dealers, there's a huge dependency of the entire business ecosystem on a large company like that. So the fix has to be done company by company, sector by sector, to enable that entire survival to happen all the way through the chain, and to ensure that a Maruti pays its suppliers in time. Maruti itself needs to be in the pink of health.
Absolutely. Very pertinent points. But having said that, I mean, let me, do a rejoinder. What would you recommend? Would you recommend then that the easiest way to deal with this would be a blanket reduction of GST? I mean, how does one ensure there is more liquidity, not only in the hands of MSMEs, but also in the hands of corporate India, so that they are willing to part with it?
So I think the liquidity program announced is fabulous, provided it's executed in time. I think that was the point that both the previous panelists have indicated, that how do we make sure that it happens immediately? And government can push the banks to do this. So, and it can only happen if some of the discretion that is left there is taken away, that it is indeed done on not just loans availed, but loans sanctioned, which was another very good point made, because for someone who hasn't borrowed thus far gets punished by virtue of the fact that they haven't borrowed thus far. Whereas you want to give them the benefit of being able to avail of a loan under these conditions because they're needing to. So getting that liquidity into the company right away is important. I think, what industry was probably hoping for was a little more subsidization other than just the giving of liquidity and loans. And that is not apparent right now for these companies. But the best jolt of good news and the injection of that is needed is opening up. The fact that you can be back in business is actually the best medicine that can be administered today to these companies. And of course, I understand that we do want to try and keep everything to do with the COVID pandemic in check. But I think we cannot now lose sight of this whole issue of livelihoods and the interconnection that has with lives.
Let me take it to you, Madan, and the continuity of what she's just said. While that's all very well, do you think the impact of the fiscal package will not be as one envisages, only because banks themselves are paralyzed by risk aversion, and to force them to lend, I don't know how far. I mean, you'd be the best person to tell me and my viewers how far that's feasible. And secondly, I believe some bankers have already expressed, their displeasure, of course, anonymously, saying that the fact that the credit guarantee is not directly being taken up by the government itself, and it's really being redirected through the CGTMSE, which is really the Credit Guarantee Trust Fund for Micro and Small Enterprises, is not giving them enough confidence. Do you think these are valid concerns?
No, they're absolutely valid. In fact, we as a rating agency, we are in touch with the bankers. And I think this entire issue, which started from March itself, when we had this moratorium coming in, increase the working capital limits. These are all very good for the borrowers. But if you talk to bankers, I think they're just too scared to do any additional lending. Just imagine a company which says that for 3 months I'm taking this moratorium. As a banker, will I feel comfortable lending to this person any further funds? The answer is probably not. And I think there's lots of credit risk aversion which is there among the bankers, especially the public sector bankers. And all of them say that, look, today I'm asked to lend, I lend, and after 2 years, I don't want the CBI or somebody to come after me saying, why do you lend? So therefore, they're only lending for the better rated companies. In fact, one interesting thing is that we had this TLTRO for the NBFCs, it was 25,000 crores of auction. It's around half of it was actually bid for, which meant that banks were really not interested in going for low-rated paper. So it's true that unless there is a firm guarantee being given by the government, which one was hoping would happen in this particular SME package, the bankers would definitely be thinking twice before we do the lending, because they need this assurance that the money which they're lending is not going to go bad at some point of time. Because today I think we are all in this overdrive of saying that keep lending, but then I think after 6 months we should just remember that the NPAs are going to increase. At some point of time, if there's no production in the economy, you will not be able to service your debt, and your NPA levels are going to go up. And all of us will sit here and start pointing the fingers at the bankers saying, why have they messed up? So I think that's the concern which the bankers have, and this is what should have been assuaged by the government, saying that, look, we are here to provide this kind of guarantee. Now, in terms of the Overall fiscal effect, I think what our calculations show is that so far, not more than around 40 to 50,000 crores of the announcements would actually be coming from the budget. Most of it is coming through the banking system. It's coming through the PSUs when it comes to the discoms, which is slightly out of this topic which you're talking. But generally, I think most of the funding is coming through the liquidity side, through the banking system. And in a way, that way it's been managed fairly well by the government. But this only takes care of the supply, not really on the demand side.
Sure, sure. Madan, you've heard Naina and you've heard Animesh. What is your prediction in terms of, this fiscal, in terms of the MSMEs actually getting up and, fixing themselves and starting to run? I mean, do you see that as a distant possibility, or is it a complete washout?
No, I think most of the measures of the government have been on the supply side, and I think what we have been debating so far is that is little which has been done on the demand side. In fact, what we were talking of, I think some of the panelists were talking of in terms of tax cuts and cash transfers. I think that's the right way to go to make sure you're able to spur demand. Because the moment you do it on the supply side, you're actually dependent on other constituents taking the initiative and playing out the role. So currently, I do not see too much of it happening, even though there could probably be 2 more rounds of reforms being announced. To my mind, I think it will be more on the supply side based on the precedents we've had so far on the other sectors. And I think it's going to be a low growth year, probably not a negative growth, but definitely we won't be more than a 1% growth or so for this year. That's the best possible scenario. And I think the problem which we had even before the pandemic came in, that was on the demand side and employment, are definitely not issues which can be handled this year. I think what the government is doing is probably helping people sustain themselves, but we don't see anything which is actually going to drive the economy. I think that's the basic message which we get from what has been announced so far and what could possibly be the path forward also.
I do have one question as a rejoinder to you, and I'll take it to the other panelists after that. We aim to be self-reliant, and that's really the theme and our new motto. But having said that, I mean, I can't seem to wrap my head around it, so help me. How can India, which exports, I mean, I believe about $300 billion and imports $500 billion worth of stuff, be self-reliant? How do we get on that track?
No, in fact, I think being self-reliant is more of an idealistic goal which we're talking of, because I think in terms of basic economics, I go back to the theory of comparative advantage. Every country is supposed to produce those goods and services where it has a comparative advantage. And the whole idea of globalization and trade is to ensure that you import those goods and services where you don't have the advantage. So that brings about the most optimal solution. So I think self-reliance, when you're talking of it, it's more a case of inspiring people that we should all look for positive, try and make sure that we do well in what we're doing, so that we're able, the common good is served. I wouldn't look beyond that. It's definitely not a case of saying that we're not going to import it. There are lots of goods and services which we are not in a position to import because we don't do it in a cost-efficient manner. I think that's why there is foreign trade across the world, and I think that's the way it's going to be also in the practical sense.
Naina, you want to add something to what he just said?
This approach to self-reliance has to be really flushed out a lot better. I don't think it's the government's intention at all that we become, again, one of those protected economies which does not, in fact, allow for competition from offshore. In fact, what is underlying and critical for everything we do in our country, it has to be the competitiveness of Indian business. Because unless we are competitive at a global level, we will not be able to export. And in order to be competitive, there are times when we will have to import certain components because we can't make them cheap enough here and produce a finished product, which is ultimately what we look to do. And if you look at whole industries like the diamond business, we import in order to export value added in the process in the country. So each product's chain is different. But I think self-reliance, to the extent that it substitutes products which maybe we allowed to come into the country, which we can do in country, creating jobs in the process. And I think the example has been raised about, say, agarbattis. If 70% of agarbattis come from Vietnam, surely we can be doing that in the SME sector. The fact that we import a lot of electronic goods, which in fact is one of our largest import bills along with oil. and hydrocarbons is, again, something worth addressing for the country as well. We have the demand in-house, so let's look at how we can get those companies to manufacture here. The commitment by Apple now, for example, to move some part of its global supply to India. I think if one is to look at self-reliance in terms of creating an environment where India is attractive for business, where we become part of global supply chains, but we also manufacture for our own market in the process, is certainly worth considering. So I don't think we should put barriers up. I'm not in favor of duties as much as to give the SOPs to our industry in the country to start up, to establish, to grow, to compete, and to give quality. I certainly don't want to go back to the days when we had an ambassador car and that was it. We want the best products for the best value for our citizens and produce it in-house, in country if we can.
I'd like to close with you, Animesh, as you are really, at the heart of all the action. What is your expectation, realistic expectation from, what MSMEs are going to suffer, for the rest of the year?
Rest of the year, we have three major concerns. One is the demand. So, as I said, the government should do something, especially not to discourage these PSUs and the government departments to buy less. They should be, in fact, encouraged to keep at least the buying at the same level. And if government can consider some GST reduction for a small window. The second thing will be this liquidity. The RBI should set up a monitoring mechanism where they should ensure that whatever the government has announced, the banks are disbursing that. And third thing is the return of the workers. And there has to be a partnership with the state governments, also do some confidence boosting measures so that these people start slowly returning back, so that our production is not hampered, because we will see some demand coming up generating from next month onwards, because we being part of a supply chain would be definitely needing production to feed our buyers. So maybe it not be that a full scale, but then workers should start coming back. Right now, whosoever unit has started working, we are seeing a massive drop of the workers. Units are reporting with only 10 to 20% workers right now. So this thing should be done.
Well, with that, let me thank the three panelists. Thank you, lady, and both the gentlemen. Thank you for the candid speak. And hopefully, as we pass through this dark tunnel, we'll be able to lift some spirits and the MSME sector can get out of this terribly turbulent times stronger and fitter. Thank you so much.